Hello everyone. Good morning. It's Thursday, May 26th. It's about 10 o'clock, almost 10 o'clock. Taking a look at the market, I thought I'd share this with you. Uh, if you think in terms of this market being a patient in intensive care, it seems that we've been in a coma. The patient's been in a coma for a while. But it seems as though, to me anyway, only to me, and it's early, but and it's bottom fishing. But I want to show you a few signs that the patient may be coming to life, like he's opening his eyes. Okay, so here's a chart of the S&P 500. It's a daily chart. Um, this is a chart that I learned to plot from Jake Bernstein, and what it is a 10-day moving average of the highs and an 8-day moving average of the lows. It's called a moving average channel, MAC. Okay, moving average channel. So on this chart, I also have, although Jake doesn't use it, parabolic with these parameters here. And I have the stop loss order that one of the stop loss orders that he suggested, a moving average of the lows, a 3-day moving average of the lows. And that would be this magenta line here, this magenta line. Let's see, what else do we have? That's about it. Now, he does not use these indicators, this triple momentum indicator, but I want to discuss it. I use it on my other charts, okay? MACD he doesn't use in this approach, but I want to show you MACD and what it's indicating right now. And also what he uses is the Larry Williams accumulation distribution line and a 57-day moving average, simple moving average of that 57 of that AD line, accumulation distribution line. And the accumulation distribution line, as the term suggests, it looks at the ratio between the accumulation of stocks and the distribution of stocks, buying or selling. Okay. Now, recently in the Stocks and Commodities magazine, I came across an indicator that someone used in an article, and it was a 10-day moving average of the rate of change of the AD line. And this is what I plotted here. And I find this pretty interesting. I'll discuss it as we go along. So that's the setup here. Now let's look at where we are now. Well, it's good to look at where we came from. So in April, I think, yes, beginning in April, we started this decline, okay? And specifically, according to Jake's approach, on April, let's see, what is this? April 12th, the 80 line crossed below its moving average. So that was a setup, right? And you had two complete bars below the moving average of the lows. So that was a sell signal. And that was pretty prescient, I would say, because this is what occurred since then. Now, it's not on this chart, but the 4 EMA crossed below the 9 EMA, and I don't have those plotted here, but I have this bar circled. This is exactly where the 4 crossed below the 9, and you've heard me talk about all that. And so we got a signal earlier on April 6th that this market was declining, okay? It was about to go down. And the parabolic went above prices, etc. Now, where are we now? Where are we now? Okay, we made a lower low here, okay? We made a lower low than this low, and I drew this line. Now, if you go to MACD histogram down here, you'll see that even though we didn't get a false breakout, which is classic for for a divergence of MACD, we got a divergence, okay? But we didn't get a classic divergence because we didn't get a green bar up here, green histogram bar. okay, telling us that this market had a false breakout. However, we could see that when the market made a lower low here on a hammer, hammering out a bottom, MACD made a higher low. So in some limited sense, we have a divergence here. Now, what did we find in the last 2 days is that yesterday we had MACD giving us a buy signal here. And in fact, we may have had an earlier buy signal if I expand the chart. Where was MACD here? Wow, you don't see it here. I'm looking for it in this area. It was still red. It was still below here. See, look at it. It was still, it just briefly appeared here, but it was still below the zero line. So the first buy signal on MACD occurred yesterday, okay, on the S&P, right, on the daily chart. And today, so far, we are getting another MACD histogram bar above the zero line. So that's one indication here that maybe the patient is beginning to wake up and open his eyes, okay? But let's go back up here. You see the parabolic switch now, and it's below the most recent bar, these two bars, today and yesterday. So the parabolic switch, right? Now, if we look at the sum of the rate of change or the triple momentum indicator, you can see that what I did was I plotted a trend line from this high to this high to this high. I plotted the highs, okay, going all the way back here. And what we have now is the triple momentum indicator breaking above that trend line. It broke above it here and it came back down. Now it breaks above it again and finds support at that trend line, and it's trending up. Granted, it hasn't yet crossed the 4% line. Okay, it hadn't crossed this line yet. Okay, and that's when you get more confirmation that maybe we experience a bit of a change in the direction of the trend. So this is insofar as the triple momentum indicator is concerned. Okay, this one. Now, let's go down to the Williams 80 line. You can see that I plotted a trend line from this high to this high, and we seem to be breaking. We are breaking above that trend line now. We are breaking above it, and it is reflected in price movement here. And the other thing is this 10-day moving average of the rate of change of the AD line. This is a 10-day moving average of the rate of change, the ROC, right, of the AD line. And that has crossed above the zero line, which it hasn't done so since way back here. Since it hasn't been above the zero line since when the market turned around. Okay? So now I'm thinking, boy, this may be an indication that this patient is opening his eyes and waking up. Now, having said all of that, the market is still in a downtrend. Okay, market's still in a downtrend. So I bought something today. I bought the TNA, which is the leveraged Russell 2000. Okay, I don't own a hell of a lot. That's all I bought. That's all I have. So I am being very patient here. But I wanted to show you these, some people would say green shoots. Green shoots, okay? Now let me show you another chart. Let's go to the chart that I usually use. So let me bring this over. Let me get rid of this one here. Put it back over here. I'll bring this one over. This is one I usually use. And here, let's fill up the box. Let's expand it to fill the box. I think I'll bring it about here. All right, and now we see similar indicators here. You can see MACD is now giving us buy signals here. The 80 line is trending up, and if I were to draw a trend line, that same trend line here, you would see it breaking above, etc. But look at the moving averages up here that I usually use. You can see that the 4 is just about looking to break above the 9 here today. Okay, the 4 EMA, that yellow line, is just about looking to break above the 9. That hasn't been the case since back here. The 4 broke below the 9 here, right? And now, and it stayed below the 9, right? Stayed below the 9 all the way. And now the 4 is looking to break above it. Is this another sign that the patient is waking up? Hey, maybe so. But I won't bet the farm, not yet. We need to find some more bullish indications than this, okay? So I'm just nibbling here. And I just thought I had nothing better to do. I would make a video and show it to you. Let's see what the patient trader was showing us. What is this indicator showing us? Yeah, see, this indicator is showing us it's trending up. This is an indicator I started using many years ago from TC 2000. There was a guy there who created this indicator, and it's really MACD histograms. You see, it's really different versions of MACD. Okay, and when it's trending up, that's a good thing. Now it's not something that I rely on a lot, but I like to look at it anyway. Let's go to the current trend chart that I usually use. I'm gonna bring this chart back over here because I could show you the Ishimoku cloud and those sorts of things again, which we've done in the videos before, you know, the weekend meetings, right? But let's take a look at some of these other charts. Whoops, I need to let's see, how can I get this? I need to click on this. Well, let me see if I could get Ishimoku. No, I want to move this chart up. Just bear with me for a minute, okay? I can't get it up. Oh yeah, here it is. Okay, if I click on Ishimoku, you can see that price is still below the cloud. Price is still below the cloud. So this is why I say this is really bottom fishing. We really don't want to have much confidence in a turnaround until we get above the cloud. Okay, so caution is still in order here. All right, this would be what we were just looking at, Jake Bernstein's. This is a chart that Jake uses too. And this is a chart that tells us whether we are in an uptrend or downtrend. When the green line is above the red line, let me tell you what this chart is about. It's a 8-day moving average, okay, of the close, 8-day moving average of the close plotted in green, all right, and an 8-day moving average of the open plotted in red. So these are the averages of open prices, the price at which the market opened for each day, right? And the green line represents a moving average of closing prices for over an 8-day period. You know, it's average over 8 days, and we get those price points. Okay. Now I also have the Jake's stop loss order here, and I have the parabolic, although he doesn't use it. But anyway, what is this chart telling us? That since the 8-day moving average of the close crossed below the 8-day moving average of the open, and we got this sell signal coinciding with the 4 crossing below the 9, right here, right? We've had this downtrend, and the 8-day moving average of the close never went above that of the open all the way down. So what's happening now? For the first time, we're getting this patient opening his eyes. The 8-day moving average of the close today, at least, so far, it could change, but at least we're getting a signal here that the close is above the open. Let's see how that turns out for the rest of the day. So, but I find this interesting. I just wanted to share it with you. And then if we look at the 4 and the 9 EMA, you could see that the 4 is just crossing above the 9 right here. Here's where it first crossed below, right? And it remained all the way down here, right? Now we seem to be getting a cross back above the 9. So since I had nothing better to do, I thought I would take a look at these charts and I'll share them with you. And I hope you find it interesting. It's bottom fishing. I bought a couple of things. I've been day trading the TNA and the TZA. I've been day trading a few other things, but I'm not holding a whole lot of stocks here, you know. But I'm looking to nibble, and I'm nibbling on the Russell 2000. And the 2000, I just bought the leveraged TNA, right? Not suggesting that you should do the same, because each person's needs are different, and you know your tolerance for risk, etc., is different. So please bear in mind that I'm not saying that anyone or everyone should go out and do the same thing I'm doing. I'm just discussing the chart with you and showing you why I'm taking a bite, little nibble. Okay. All right. So I hope that gives us some thoughts, you know, for the future. Let's see how it turns out. It's about a 16-minute video, so I'm going to stop it here and send it to you.